Hi there, welcome to my latest 2-minute takeaway. Now it's that time of year and it's time to talk about financial year end. I'm Hilary O'Dwyer, founder of Titian Consulting, your virtual CFO. So it's coming up to the end of May. It's time to think about this false deadline in our heads, which is the 30th of June, and what that means for us and the financial implications of finishing a financial year end and moving into a new one. Obviously, it's just this false thing that we do, but it is important to be aware of it and make sure that we've got all of our ducks lined up and that we're in the best position that we want to be when it comes to our tax planning. Obviously, our businesses just tick over and nothing changes from one day to the next, but then we do click into a new financial year and it kind of all starts again. I think the key thing to think about when it's this time of year is where are you placed in terms of your tax, in your tax position, and are you profitable? If you are profitable, is there something that you want to do about that so you can reduce that profitability in a good way? One thing that's available that has changed from the budget that was released last week is that the capital expenses that can be written off has been increased back up to $20,000. It was going to be the usual $1,000 this year, but they've decided to extend it for a further year. So what that means is if there's a capital item that you wanted to buy for the business, it could be a laptop, it could be a piece of equipment. If it's under $20,000, you can expense that straight away and get that tax break in your books. But the key thing to remember with something like this is it's only valuable to do it if you have the cash to do it. Spending money now to defer a tax bill in the future that you'll have to pay in May 2024. And if you don't have the money, that doesn't make financial sense. So there's no point in going, well, I'll just spend the money now because it's a tax break. It's going, well, do you need it? Number one. Number two, can you cash flow that item? And if you can't, if there's no to both of those items, then you don't even bother doing it. It doesn't matter. The other thing to think about, that if you are transacting anything out of the business for the tax year end, it needs to clear the bank before June 30th. So that means you could decide to pay your super early. So that's a really, really good one to do. So the June quarter super is not due until the 28th of July. But if you pay it before June 30 and it comes out of your bank account and it goes to the super funds bank accounts, you will get that tax break. So that's a good one and an easy one to remember. So you could catch up right now. You could do April and May super payments right now. And then once you file and process your final June payroll, you can do the super then to get that super break. So time to look at the P&L, time to see where it's sitting, time to review your tax installments that you're paying for your corporation tax. So these are your PAYGI, not related to payroll, and see where that's sitting in relation to what your estimated tax bill is going to be. If you don't know how to make that quick calculation, have a chat to your advisor, your virtual CFO, or your tax accountant to get a bit of a line in the sand to see where you're up to. So a couple of things to think about. Get working. See you next time.